So what's the real deal with the US housing market in 2024? Because from the looks of it, everything can crumble down soon. First-time buyers are basically playing with monopoly money. Crazy high prices and laughable down payments squeeze them out. It's the eternal renter's curse. Then you've got the mortgage rates playing hide and seek. If inflation gets cheeky, expect those rates to soar, sending home sales into a tailspin. But wait, there's more. Baby boomer are downsizing big time, flooding the market with homes. It's a potential price drop bombshell, but experts can agree. Some say prices will plummet, others expect them to rise. It's like they're all reading different crystal balls. And the millennials, they're eager to buy but drowning in debt. It's a classic case of real estate FOMO meets harsh reality. The latest scoop from Realtor.com is pretty telling. Home prices are taking a bit of a nosedive. At the end of 2023, the average Joe Dream home in the US is now tagged at $410,000. That's a drop of nearly 9% from the dizzying heights of June 2022. But hold your horses. This isn't exactly a fire sale. Reflect on the pre-pandemic era when the median list price was a more modest $300,000. Fast forward to today, and we're still steering at a hefty $410,000. It's like the price has got a gym membership and bulked up big time. Please take 2 seconds to help me out and hit the like and subscribe if you're enjoying the video so far. Each like and subscribe helps support this channel and keeps us motivated to keep making you great content. Thank you. Now back to what I was saying. And let's talk about mortgages. Not everyone's favorite topic, but hey, it matters. Mortgage News Daily tells us that the 30-year fixed mortgage rate is lounging around 6.7%. Sure, it's coming down from the terrifying 8% peak last October, but it's still way above the company levels we saw pre-pandemic. The bottom line, most wannabe homeowners are still in big trouble when it comes to affording these homes. This affordability circus is causing a major slump in buyer demand. Picture 2024 starting off like a party, where half the guests didn't show up. The Redfin Home Buyer Demand Index, down by 9% from last year, and a whopping 40% from its 2022 glory days. It's like buyers are playing hard to get, and who can blame them? If we're ever going to see a comeback from these buyers, we need both prices and mortgage rates to take a chill pill and drop further, especially in those markets that are currently strutting around like they own the place. Take a peek at the RevVenture app, and you'll see these overvalued housing markets painted in glaring red. Atlanta, for instance, is strutting around at 33% overvalued. Talk about living in a bubble. And then there's Miami, also flexing at 33% overvalued. These numbers are a mirror image of the pre-2006 housing crash frenzy. Now here's a fun fact. Post last downturn, Miami's prices were in the bargain bin. A golden era for buyers. So for the savvy ones among you who keep an eye on overvaluation, inventory, and those seller price cuts, you might just hit the jackpot and find that perfect moment to swoop in and grab a bargain. Let's get real here. America's housing market is turning into a bit of a circus. Picture this: sellers are throwing in the towel left and right, slashing prices like they're on some wild clearance sale. Take this one townhouse for instance. A decent-sized place with 3 bedrooms and 4 bathrooms, sprawled over 2,100 square feet. It was hanging in the market for $498,000, but guess what? The seller just hacked off $52,000 from the price. A solid 9% drop. It's like watching a desperate game show contestant. Here's the kicker: mortgage rates today are sky high compared to 3 years ago. So, if you fancy buying that house on a mortgage, prepare to cough up around $3,400 a month. That's over 40 grand a year, folks. In today's economy, for most of us mere mortals, that's a wallet buster. It seems like the housing market's turning into a real snooze fest for home buyers, especially for those poor souls hunting for a home in the past 2 to 3 years. They're getting fed up. Prices might have dipped a bit, but they're still stratospheric, and for many, just doesn't feel like a deal. So, a lot of potential buyers are just checking out, losing interest, and abandoning the market. No wonder mortgage applications are scraping the bottom of the barrel. Clearly, people are eager to buy in this lively market. As for the median sold price, giving home buyers a realistic idea of what they need to spend. On average, houses in law sell for what they're listed for. It's a sign of a market that's got its act together, for now at least. Homes stick around for about 49 days before selling. It's a decent pace. Not too fast, not too slow. Down at San Diego County, the market's buzzing with 4,479 homes for sale and 1,875 new listings as of late November 2023. San Diego's got this neat balance too, with homes selling for their list prices on average. The median sale price there is $858,000, painting a clear picture of the local market value. Nearly half the homes in San Diego sell above list price, showing it's a competitive scene, but still, over a third sell for less. So there's room to haggle. Inventory in San Diego rose to 2,929 homes in November 2023, suggesting more choices for buyers. Homes are selling fast in San Diego, usually in just 13 days, indicating a market that doesn't sleep. The median price for a family home in San Diego was $911,500 in December 2023, down from November, but up from the previous year. Statewide, the housing market's had its biggest slump since 2007, affecting both inventory and demand. Experts think things will look up in 2024, with home sales bouncing back and prices moderately rising, thanks to lower mortgage rates. In San Diego, demand for homes stayed strong, thanks to low interest rates and government help. But there's a snag: the pandemic slowed down home construction, tightening the inventory. House prices in San Diego are climbing, reaching beyond the fancy neighborhoods to the suburbs. The rental market is also likely to get pricier, because there aren't enough homes to go around, and prices are going up. In Los Angeles, some homes, like one in Venice that sold for $1.9 million, went for less than the asking price, giving buyers a bit of an edge in certain areas. But then some homes, like one in Los Angeles that sold for $1.4 million, 2% over its list price, show how unpredictable the market can be. The San Diego market is also a mixed bag. Some homes sell quickly, others take their time, and prices vary. Even LA's rental market varies. Some places like Santa Monica and Beverly Hills have pricey one-bedroom apartments, while others are more affordable. The median rent for a one-bedroom in California is $2,052, a good benchmark for comparing rent prices across the LA area. Los Angeles offers a wide range of housing options, from budget-friendly to luxury, catering to different needs. Both Los Angeles and San Diego are swayed by bigger economic factors like interest rates and the overall economy. These housing markets keep changing, offering both challenges and opportunities to buyers, sellers, and investors. But what do you think is next for the housing market? Share your thoughts, and if you found this insight helpful, don't forget to hit like and subscribe for more. Take care.